This is New Hampshire real estate market update. So this is pretty good because this will go over like data and updates. I think this will do pretty well. We'll find out. So let's get going. Market headlines are pretty confusing for investors right now. You're probably hearing a crash is coming, or the world's tanking, this and that. The reality is that confusion can lead to really bad timing and bad decision making. What I'm going to tell you is that investors, you really don't want to be frozen by bad data. You want to know where you're getting it from and kind of making sure that you're not rushing into something blind. You need kind of that consultant aspect to make sure that somebody's helping guide you through the mist, essentially. I'm going to give you a market update about New Hampshire. Now, disclosure, this is going to kind of tease more towards the Southern New Hampshire market, primarily because that's where 90% of the inventory is for the state, for me, what I'm working with essentially. So I want you to be aware that I'm going to give you a New Hampshire market update for Southern New Hampshire. And I'll break down kind of exactly what's happening in New Hampshire a little bit. We'll talk about it from an investor's perspective. And when I say investor, you could be a long-term multifamily holder, could be doing flips. Now, if you're a short-term rental individual on a lakefront, this may not apply to you. So just be mindful of that as you kind of watch and listen. So let's talk about inventory over the last few years. The reality is that New Hampshire is facing the same problem it's been facing for years at this point, which is supply and demand. We are not making enough housing to add to the supply that we actually require, which means more demand means driving up prices, which means that it's driving up rentals as well. Now, people are going to say, well, everything slowed down in the winter. Well, of course it did. The winter market has come. And the reality is that it makes everything slower. People are used to kind of the COVID drunkenness from, early 2020, where it was hot all year round because it had to be. That's now, I think we've shifted kind of to the pre-COVID market where we're going through crazy swing cycles. And those are things I can expect. So if you're a buyer, I think the winter's a great time to buy. A lot of chances for property sitting on the market. It's a good chance to kind of get into an asset that you might really love, whether it's a single family, a multifamily, short-term rental, don't care. It's a pretty common time to buy if you want to get a great deal. So let's talk about inventory and kind of like as a whole. Inventory is the concept of like what is available to the average person or the buyer, what's on the market. So where is inventory gone and where is the pricing gone as well? So let's kind of dive into what some of that data looks like. Now, just so you know, I'm going to provide some of the data that I have. You guys will see it in the show notes. If you go in the description, you'll see all the information there. Give it to you guys full disclosure. Now, in terms of inventory, winter market, inventory is much less. The highest you're going to get all year of inventory is the spring, and then leading into kind of like the fall. People are trying to sell before the winter. Those are your two highest inventory times. It's also subsequently where the highest buyer demand is as well. People kind of take it easy in the winter. In the summer, they're out with their vacations. Honestly, spring and fall are really active buyer periods in time. Now, while headlines are all over the place, kind of talking about whether it's inventory or whatnot, the data kind of shows a pretty balanced picture at this point. We're seeing really a market that is, I think, moderating and not collapsing, for example. For investors, this means it's less of a frenzy and craze and almost like a blood rush, essentially. We're seeing more room for kind of strategic decision making and being methodical about your decisions. So let's look at kind of key trends here. I haven't really given an update before. This is really the first one. I see this often, so I want to make sure I kind of explain and go over what is inventory doing. And what we're seeing is we're seeing properties actually kind of sit longer days on market. Inventory is ticking up a little bit. If you're a buyer, that's a pretty good sign. You could be buying a house hack, maybe a single family, a condo, a rental, a flip, could be an investment property, but we're seeing those things tick up. And now it's still kind of far from a buyer's market though. Now, what quantifies a buyer's market versus a seller's market? Everyone says like, oh, it's our time as buyers. This is going to be it. It hasn't been a seller's market for a few years. And a lot of that is honestly because of a core metric, supply and demand. And so we're seeing a kind of more balanced approach. It's not a crazy frenzy, but it's still kind of a seller's market. Here's some key kind of data that I'm going to share on the screen here. You got a medium sale price at really $500,000, $200, and this is for December. Now, the average you're going to see for the year, if you look up on like the Realtor New Hampshire board, it's probably closer to like 525, 530 at this point. And so I think appreciation has slowed a little bit in the winter, but that's because it's the winter December data market. We're at the end of the day, this is the winter. I'll be interested to see what happens when I give a market update in the spring, if we've jumped up to the typical spring craze. Now, we've seen about, a little bit over 1,500 homes sold. That's actually a pretty much year-over-year change. We've seen a 13% increase. So there's still a ton of strong demand, even in the winter, and because we've seen that transaction volume actually happen. Now, if we're looking at inventory of homes and sales, we're seeing more options for buyers. There's stuff sitting on the market. And so, which is good, it's still historically really low. And so now if we look at month of supply, we have a 2-month supply. It's still a seller's market, but it's not as much of an extreme leverage. I'm seeing much less appraisal gaps like I did during COVID, or crazy over asking offers, cash, no contingencies. You're seeing a strong supply still, but it's still a seller's market. Now let's talk about kind of just some main points here. Inventory is the key to understanding leverage in any market. In New Hampshire, we're seeing kind of like a slight increase a little bit in the number of homes for sale, but it's not uniform across all asset types, whether it's single family, condo, multifamily, whatever. To be honest, some markets are still just going to be hot. Look at the top school districts in the state. You got Hollis Brookline, you got Bedford, Wyndham, the Portsmouth region. They're still doing really, really well. Maybe the condo market in that area has shifted a little bit differently. So depending on the asset class you're looking at, you got to be mindful of kind of how the local demographics and supply and demand are going to shape that and how it looks. So pricing is a lagging indicator, whereas inventory is kind of a key for looking at the leverage of the market. When I say pricing is a lagging indicator, what I'm really saying is it's honestly, you can take a look at like the slowdown in price growth is actually a direct result of the modest inventory increase and honestly the higher interest rates over the past year. Now, when I say higher interest rates, I know we've talked like, 6 to 7%. Well, they've kind of slowed down up to like the high 5s and even low 6s. It's a big difference in terms of affordability. So this really doesn't mean that the prices are just falling off the cliff. They're not like crashing. And, like people have talked about like the Florida markets. New Hampshire is much different. What we're seeing is that the pricing isn't falling off of a cliff. However, it does mean that the market is returning to a more sustainable pace of growth. Is that an indicator of the winter? Is that the market? We'll see kind of how we go into the spring. But those are things to be mindful of. So here's kind of some supporting data. Condos, the sales rose by 6.6%, and honestly, manufactured homes rose by 12.2%, outpacing the typical 4.5% increase in single-family homes. This honestly tells me that buyers are seeking a more affordable option. They're looking for things out there that they can actually afford. Investors can kind of take note of this. I've actually noticed quite a few investors who flip multifamily homes. All of a sudden, we're getting into single families because that's what people could afford. They're adapting over time. There's also some pretty big regional difference in New Hampshire. I told you that this is going to be kind of focused on the Manchester market a little bit in Hillsborough County. Well, if you look at counties like Carroll County, Grafton, even honestly Merrimack, they saw a price increase over 6%. They're cheaper markets than the Hillsborough Rockingham County. Whereas the Coas County and Sullivan County, they actually experienced a more decline. Could have been desirability, could have been inventory and affordability, but we saw a decline in those markets. This highlights the importance of really having a submarket analysis. I'm talking about the whole state of New Hampshire. You should really know about your market. Now let's talk about rent growth and affordability. So for buy and hold investors, cash flow is king. It's the thing that keeps you alive. Appreciation makes you rich. All that said about rising rents, we're actually hitting kind of a bigger issue. We're hitting an affordability crisis. With the income required to afford really a medium-priced home, you need to make about $182,000, which if you look at the data, only 15% of household earners earn that much. The rental market is feeling the pressure of this. So this is a critical factor for investors to watch. You got to remember that when you're looking at those homes, the reality is you have to ask, can people afford it? And there's a reason why there's this huge influx of out-of-state demand coming in because other people have higher paying jobs moving into the New Hampshire market and they're paying those pricing. But is that slowing down? You got to make sure you watch the data. That shows a pretty tight rental demand where 15% of people can actually do it in the state, which is why we're getting out-of-state influence coming in. Now, if you're looking for a one bedroom, this is just fair market rent across the board, but the average in the state is $1,400. So the reality is that that's actually pretty expensive for a one bedroom. Some people would say, oh, I used to pay $800 a month. Well, now it's $1,400 for, just to have a one bedroom apartment as an average in the state. If we're looking at two bedrooms, we're looking at more close to $1,800. It's really close. There's a lot of rent growth that we've had year over year. I mean, since 2023, we've gone up by 11%. So people, renters are feeling the squeeze. Now, vacancy, you're somewhere, we're kind of between that 2 to 4% range. It's still a really tight rental market. Under 5% is a really tight rental market. For context, during COVID, there was a 1% vacancy rate. So the reality is at 4%, we're still quite tight for what we're dealing with in terms of rental vacancy. So you're an investor and maybe you're looking to find the right opportunity. So what does that look like? Where are the deals? And the reality is that kind of the sweet spot for investors right now is actually small multifamilies, 2 to 4 units, and more affordable housing homes like condos and manufactured homes. I just talked about the affordability index. The reality is that people need $182,000 to buy a medium-priced home. Keep that in mind. There's only 15% of the buyer pool can do it. So really anything under that $500,000 mark, you're probably going to do pretty well. Now, this is a pretty strong market for anybody that's a renter or even a first-time buyer. Those are people that if you're a flipper looking at those, be mindful of that. And even if you're an investor, those 2 to 4 unit multifamily, house hackers can typically pay top dollar and afford more because they have that rental income coming in for their loan products that they're required. So here's some supporting data. The reality is the multifamily market in New Hampshire is performing at honestly exceptional levels across the board. It's doing really well with an average occupancy of 97.2%, give or take. This has kind of changed. It'll kind of float from that range, but they're occupied at a high rate. because of the demand and obviously the affordability and renting. Small multifamily listings, to be honest, there's a lot of duplexes that you're always going to see in the market. Investors don't really gravitate towards those. That's more of a house hacker. You'll see 3 families or triplexes across the board. There's still some inventory that's out there. It's a little bit tight given the winter, but at the end of the day, there's still some products out there if you're a house hacker. The true investors, and when I say true investor, let's say seasoned investor, they're looking for those value add opportunities. They're a little tight, inventory is low, so people are either looking at farther places or they might be kind of having a different method for how they have outreach for those properties. So honestly, looking ahead, this is kind of our market report. The 3 things that I always watch at a constant status are watching inventory, the rent growth, and how are the financing situations looking across the board. With the evolution of the Fannie Freddie loans coming up the last few years, we've gotten some increased financing options for buyers to help them with the affordability aspect. Inventory, my questions I'm asking are, will the number of homes for sale continue to creep up, or is it going to kind of plateau a little bit? Are we going to go into that spring market and are things going to shift around again? Interest rates are dropping. There's a lot of dynamics that I'm watching here. And so, the reality is for rent growth as well, are we going to see signs of kind of plateauing? Is it going down? Is it going up? With the HUD rents, they've been going up every little bit the last few years. Are they going to kind of stop in 2025? Are they going to plateau? The reality is that there's a lot of factors to look at when looking at market data, and it supports kind of what's going on in the market. So it's important for you to be aware of these differentiating factors that are going to make your investment strategy the right one when you're well informed. To be honest, and this is just me being blunt, the mortgage forecast, everyone's like, oh, it's probably going to be in the 4s or the 5s or the 6s. In 2026. That's probably going to happen. If I had a crystal ball, I honestly don't want to give you an answer. It's got to work right now. I don't think you should make any decision to buy anything based on what it might be. I want you to make a decision on, does it work right now? And if it gets better later, perfect. If it gets worse, then you're prepared for it. So whenever you're buying something, don't make a prediction on what the mortgage industry is going to do, because you can't control it. What you can control is what kind of asset you buy, what price you buy it, and what you do to the asset while you actually own it. And I say asset, it could be single family, condo, investor property, whatever it is, but you want to base it on the actuals, not predictables. So all this data is great, but you have to make sure you use it correctly. You want to make sure you're inferring properly. And the reality is, if you're questioning everything, you're not alone. A lot of people are watching very carefully what's going on. To be honest, my recommendation is that you work with somebody that is going to be having your back, they have your best interest, and you kind of keep your ear to the ground a little bit, and you're making sure you're following up what's going on. As always, you can call, text me, whatever. My information's out there, public. There's also, if you look in the description, I'll have my information there. Feel free to book a meeting. I can show you some of the data that I find and how I pull it and what I do to what I'm looking at. Happy to go through that with you. No pressure, just to make sure that you guys can kind of make clear decisions at any point in time. If you ever have any questions, feel free to reach out. And as always, my name is Andrew Bosco. I'm the CEO of the Candor Investment Group, and I'm excited to keep bringing these video series. If you like the market data, please make sure you kind of leave a comment. If you think things that should be kind of changed or altered, happy to take any feedback. And please like, share, and subscribe. I'm going to keep doing this, and let's roll, everybody. Thank you.